In this video, we're diving deep into the world of high-growth stocks that have the potential to skyrocket in February and then keep growing over the coming years. These are stocks you want to hold for a long time. We're talking about 3 companies leading their industries, expanding rapidly, and positioned to dominate their markets. These are the kinds of stocks that, with smart investing and patience, could turn a small investment into life-changing gains. Now, let's be real. This isn't about getting rich overnight. Investing in individual stocks always comes with risks. But with careful research, strong market trends, and a long-term perspective, you can position yourself to reap massive rewards. Before we jump in, do me a favor, hit that like button and subscribe to the channel if you haven't already. It really helps the channel grow and allows me to keep bringing you high-quality investment insights just like this. Let's get into it. We're starting with Dynatrace, a leader in AI-powered observability that helps businesses monitor and optimize their digital operations. This company has been consistently outperforming expectations, proving itself as one of the most promising growth stocks in tech. Let's break down why Dynatrace deserves a spot on this list. Dynatrace kicked off 2025 with impressive Q3 financial results, exceeding market expectations. The company reported earnings per share of 37 cents and $436 million in revenue, reflecting solid growth in its observability and AI-driven automation solutions. More importantly, its subscription revenue continued to rise, highlighting strong demand from enterprise clients. Investors took notice, as Dynatrace annual recurring revenue grew by 16% to $1.657 billion. Building on this momentum, Dynatrace is preparing for Perform 2025, its annual customer conference. This year's event includes a dedicated investor session, where the company will discuss its go-to-market strategy, AI advancements, and future expansion plans. This is a critical event for both investors and customers, as it sheds light on how Dynatrace plans to sustain its rapid growth in the coming years. Expanding its reach even further, Dynatrace has strengthened its partnership with Microsoft to enhance cloud observability and security for Microsoft Azure customers. This is a major win for both companies, as Dynatrace AI-powered platform will now be deeper integrated with Azure's cloud services, making it easier for enterprises to optimize performance, detect issues, and improve security. This partnership reflects a huge market opportunity, as more businesses shift to cloud-based solutions and need real-time observability to maintain performance and cybersecurity. With Microsoft backing Dynatrace platform, its credibility and customer base are expected to grow significantly. The world is moving toward AI-driven automation, and Dynatrace is making sure it stays ahead. The company recently announced new AI-powered observability capabilities, specifically designed to support organizations using generative AI. These enhancements allow businesses to monitor, analyze, and optimize AI-generated content, applications, and services in real time. This means better performance, stronger security, and more efficient AI workflows, key factors for any company leveraging artificial intelligence. With AI adoption increasing rapidly, this move cements Dynatrace as a leader in the AI observability space. It's one thing to claim market leadership, it's another to be recognized by industry experts. Dynatrace was recently named a leader in the 2024 Gartner Magic Quadrant for Application Performance Monitoring and Observability. Gartner ranks companies based on their ability to execute and their completeness of vision, and Dynatrace scored the highest in both categories. This solidifies its reputation as one of the most trusted and capable observability platforms available today. For investors, this is a key validation that Dynatrace isn't just growing, it's dominating its field. Dynatrace has demonstrated robust financial performance and strategic growth, which is reflected in its recent stock price movements. As of February 1, 2025, the stock is trading at $57.75, with an intraday high of $59.71 and a low of $56.81. Analyst sentiment remains optimistic, with a consensus 12-month price target of $64.42, suggesting an approximate 11.55% upside from the current price. Price targets range from a low of $55 to a high of $70. Additionally, Dynatrace's relative strength rating has improved to 71, indicating that the stock's price performance over the past 52 weeks is strong compared to other stocks. Historically, top-performing stocks often have an RS rating of at least 80 during the early stages of their ascents. Dynatrace's solid financial results, positive analyst outlook, and strong relative strength suggest that the company is well-positioned for continued growth, making it an attractive option for long-term investors. Moving on to our next stock, First Solar, which recently made a huge leap in U.S. manufacturing by inaugurating a $1.1 billion solar panel production facility in Alabama. This facility adds 3.5 gigawatts of vertically integrated manufacturing capacity, increasing the company's ability to meet rising demand. This move is critical because the U.S. government is heavily incentivizing domestic solar production through policies like the Inflation Reduction Act. By keeping production in the U.S., First Solar is securing government backing, tax credits, and supply chain stability while positioning itself as a major American renewable energy provider. While strengthening its U.S. production, First Solar is also expanding into international markets. The company is investing in India's rapidly growing solar sector, increasing manufacturing capacity to support the country's aggressive renewable energy targets. This strategic expansion is key for First Solar's long-term growth. India is one of the fastest-growing solar markets in the world, and First Solar's thin-film solar technology is well-suited for hot climates, making it a perfect fit for India's energy needs. Scaling manufacturing is just one part of the plan. First Solar is also investing in cutting-edge technology. In May 2024, the company acquired Evolar AB, a European leader in perovskite solar technology. Perovskite solar cells are considered the future of ultra-efficient solar energy. This acquisition allows First Solar to develop next-generation solar modules that could potentially outperform conventional silicon-based panels. This move signals that First Solar is not just competing with existing tech, it's shaping the future of solar power. Expansion and innovation mean nothing if demand isn't there. But First Solar has no shortage of buyers. Major renewable energy developer Intersect Power has secured 4.9 gigawatts of First Solar's module technology for delivery between 2025 and 2029. This brings Intersect's total 2022 orders to 7.3 gigawatts, reinforcing that utility-scale developers trust First Solar's technology for massive projects. Large-scale deals like this provide long-term revenue stability and prove that First Solar's technology remains in high demand. Scaling solar production requires stable access to key materials, and First Solar is making sure it's ahead of the curve. The company has partnered with Missouri University of Science and Technology to support critical materials supply chains, a strategic move to ensure sustainability and independence from supply chain disruptions. This initiative is particularly important as the global solar industry faces raw material shortages. By securing its own reliable material sources, First Solar is protecting itself from volatile supply costs, ensuring production stability, and positioning itself as a leader in sustainable manufacturing. Beyond expansions and partnerships, the company's financials remain strong. In its Q3 2024 earnings report, First Solar continued to show solid revenue growth, proving that its investments are translating into profits. The key takeaway? First Solar isn't just expanding, it's making money while doing it. Investors want to see that, and the company's consistent financial performance keeps them confident. Looking ahead, investors are eagerly waiting for First Solar's Q4 and full-year 2024 results, set to be announced on February 25, 2025. This upcoming report will give insights into the company's full-year performance and its financial guidance for 2025. This will be a crucial moment. A strong Q4 report could push the stock higher, while a weaker outlook might raise investor concerns. But given its recent financial strength and expansion plans, expectations are optimistic. Now look at what the analysts think about First Solar. Across the recent 3 months, 21 analysts have shared their insights on First Solar, expressing a variety of opinions spanning from bullish to bearish. It says that the table offers a condensed view of their recent ratings, showcasing the changing sentiments over the past 30 days and comparing them to the preceding months. Barclays also said gave it an overweight rating is a recommendation given by analysts when they believe a stock will perform better than the overall market or its industry peers. It suggests that investors should allocate more of their portfolio to that stock compared to its benchmark index. First Solar has been making all the right moves, but how has its stock been performing? As of February 1, 2025, First Solar stock is trading at $167.52, with an intraday high of $170.36. While the stock has seen short-term fluctuations, its long-term trajectory remains strong due to its expanding production capacity, strong demand, and government-backed incentives for renewable energy. Beyond financial performance, First Solar has a key competitive advantage. It is one of the most sustainable solar companies in the world. Additionally, the company has invested over $1.5 billion in research and development, ensuring it remains at the forefront of solar technology. With global governments increasing investments in clean energy, First Solar is perfectly positioned to capitalize on the shift toward renewable power sources. From its manufacturing expansions in the US and India to its advancements in solar technology and strong financials, First Solar has everything it needs to lead the solar industry in the coming decade. Moving on from First Solar, Let's dive into Boston Scientific, a leader in medical technology that's been on an acquisition spree, expanding its product portfolio and market presence. With key takeovers, groundbreaking innovations, and rising stock performance, Boston Scientific is proving why it's a high-growth stock to watch in 2024 and beyond. Boston Scientific sent shockwaves through the medical device industry after announcing its $900 million acquisition of Bolt Medical. This strategic move expands its cardiovascular portfolio, giving Boston Scientific new cutting-edge treatments in minimally invasive heart procedures. The acquisition caused BSX stock to surge 4.3%, hitting $95.94, as investors reacted positively to the company's aggressive expansion strategy. With cardiovascular diseases on the rise, this acquisition strengthens Boston Scientific's leadership in high-demand heart treatment devices. Beyond heart health, Boston Scientific is expanding its oncology division with the acquisition of Intero Oncology. This deal enhances its portfolio of interventional cancer treatments, particularly for minimally invasive liver cancer therapies. Intero's hepatic artery infusion pumps provide targeted chemotherapy, offering more effective treatment with fewer side effects, a game-changer in liver cancer care. With cancer treatment innovation booming, this acquisition further solidifies Boston Scientific as a leader in advanced medical solutions. Boston Scientific isn't just expanding in cardiovascular and oncology, it's also strengthening its presence in neuromodulation with the acquisition of Axonics. This move enhances its medical technology portfolio, specifically for treating urinary and bowel dysfunction. Axonics implantable devices for overactive bladder and incontinence address a growing patient need, especially among aging populations and post-surgical patients. This acquisition positions Boston Scientific to dominate the market for bladder control and incontinence treatments, an area with strong revenue potential. Boston Scientific is making another power move in the electrophysiology market by acquiring Cortex, Inc. This acquisition enhances its portfolio of cardiac mapping and ablation systems, particularly for treating complex atrial fibrillation, a condition affecting millions worldwide. With AFib cases rising, demand for minimally invasive heart procedures is at an all-time high. While Boston Scientific is expanding aggressively, its biggest rivals are facing setbacks. Johnson & Johnson's pulsed field ablation device, a direct competitor to Boston Scientific's FARAPulse technology, was recently pulled from the market due to safety concerns. This allowed Boston Scientific and Medtronic to surge in value, reinforcing Boston Scientific's dominance in cardiac ablation treatments. Investors saw this as a major win, proving that Boston Scientific's technology is safer and more effective than key competitors. Boston Scientific isn't just revolutionizing heart health, it's also making huge strides in pain management. The fast spinal cord stimulation therapy is proving to be a game-changer for chronic back pain patients. This advanced neurostimulation therapy offers pain relief within minutes without the side effects of traditional opioid treatments. With chronic pain affecting over 50 million Americans, this innovation could drive massive market growth for Boston Scientific. Boston Scientific's relentless push for medical innovation has earned it a spot on Fortune's America's Most Innovative Companies list. Investors are taking notice. Boston Scientific stock has already surged 57% in 2024, and analysts believe there's even more room to run. Thanks to multiple acquisitions, product launches, and strong earnings, Boston Scientific has seen one of the best performances in the medical tech sector. Boston Scientific stock is currently trading at all-time highs, reflecting investor optimism, strong earnings growth, and long-term expansion plans. With its rapid expansion into high-growth medical fields, continued acquisitions, and industry-leading technology, analysts remain bullish on Boston Scientific's future. Many firms have raised their price targets, with some expecting the stock to surpass $119 per share in 2025. And there you have it. 3 high-growth stocks that could take a small investment today and turn it into something life-changing in the years ahead. We covered Dynatrace, a leader in AI-powered observability and cloud security, First Solar, which is dominating the renewable energy sector, and Boston Scientific, an innovator in life-saving medical technology. These companies are at the forefront of their industries, tackling real-world challenges and poised for massive growth. Now, I'm not saying it's going to be easy, and I'm definitely not guaranteeing you'll be a millionaire overnight. But what I am saying is that investing in companies that are revolutionizing their industries, leading innovation, and solving global problems puts you in a strong position for long-term success. If you found this video valuable, hit that like button and subscribe for more insights on high-growth stocks and smart investment strategies. Until next time, stay informed, stay invested, and as always, hustle harder.